today, even if you haven't used Bitsgap before, if you are a newcomer and you are not yet familiar with the system, the interface, and how everything works, then already today, like during this webinar, you will be able to initiate, like to create your first Autobot if you haven't ever configured any automated trading systems. You will be able to start trading futures, or at least to monitor your open positions through the Bitsgap trading terminal on your Binance exchange. So once again, the trading terminal, I will go step by step what are the biggest updates so far and how you can use at your best all of the instruments that we created. So futures trading finally is enabled. So for those users who have been trading through Bitsgap for quite a long time, that's basically like the biggest news so far, because you are now able to monitor your futures positions on Binance exchange, and you can actually execute trades on your futures exchange as well. So the analytics, we've added some improvements into the statistical interface. So regarding your automated bots, you have now a better access to even greater metrics that provide you with more insights regarding your performance, as well as metrics that can be used to project future returns. So we will start with the trading terminal, and yeah, let's move to the trading terminal itself. So that's the frontal page as you log in and go to the trading section. Notice that on the left side, that's what I call the analytics side, because here you have the order book and you can adjust it by the decimal value. So for instance, let's switch to BTC trading. Oh yeah, that's true, there was no sound. Okay, check 1 2 1 2. So did you just skip all the information that I've been providing you with, like the last 3 minutes, or? Yeah, okay, so let's continue. And yeah, so as I mentioned, on the left side you have the infographics, the analytics, and you can change the order book. So you can have the buy side, you can have the sell side, or you can have the 50% split. Also information like recent trades. So using this constantly changing flow of orders being executed on the exchange, you get the idea of how the market is now performing, like what is the selling pressure, what is the buying pressure. But like the cool thing that we've created is below, and I actually call it sellers and buyers pressure ratio. So here you get the information like what was the buying volume and like selling pressure in terms of the volume traded within the last minute, 5 minutes, 15 minutes, and 30-minute time frame. So using these metrics, you can estimate whether the selling pressure now on the market is relatively stronger than the buying pressure, and that gives you some sort of the idea of whether the market is more likely to move to continue its rally, or the rally has lagged a bit and it's about to fall. So this information is provided here. It's not a benchmark, of course, and it doesn't guarantee you that the selling pressure will remain the same. Like, it is constantly changing, just giving you an overview of what is the selling and buying volume on the market right now. And on the right side, which I call the decision-making side, so that's the way we've split the desktop, like the dashboard. So as you log in and move to the trading section, before initiating the trade, you need to analyze the market, right? So you have the chart, which you can zoom out and zoom in. All right, you can change the time frame. You can insert various indicators, like the, let's say, the stochastic RSI, and you can configure the stochastic RSI as well. So absolutely the same system as on the trading view, because that's actually the chart from the trading view. So that's pretty familiar to you already, and I guess you get used to this chart layout. So yeah, so before you initiate the trade, you analyze the market, and here you have all information, like additional information, before you make a decision. So that's why you move from the left side eventually to the right side, where you have the decision-making board, where you can now decide whether you are willing to enter the market with the market buy or sell order, which is going to be an first priority execution, and for that you will pay a larger fee, or you can use the limit buy or limit sell order, which will place your order to the order book, and as soon as the price reaches the price that you typed in here, the order will be executed. And you have the stop limit, which has the stop price, or in other words, that's called the trigger price. So let's say let's say as soon as the price reaches 15,400, you want to open a sell limit order at the price of a bit higher, 15,500, and you're gonna here type in the amount of BTCs you are willing to sell or buy. All right, of course, if you have BTC at your disposal, like on your portfolio, then you can use the sell limit order. But just for the sake of the example, I'm providing you an overview, like a quick overview how you can use the stop limit. So the stop price is the trigger price. So as soon as it's triggered, it will place a limit sell order in this case. And we also have the shadow order. All explanation is provided here. The TVAP and the stop limit that I've already explained to you. More about TVAP and shadow order you can actually find in the knowledge base, as well as in the upcoming YouTube video that I'm currently working on and will upload soon, so that you will have all of the use cases of how you can use the TVAP and the shadow order, what are the strategies behind these new types of orders. So all information you need to know of how to use shadow order and TVAP. But like the general information is already provided here. It's pretty straightforward. It already makes sense, but it can be that for beginner traders that can be somewhat confusing. So that's why I will be releasing a YouTube video soon. So yeah, and below, of course, you have the balance. And notice that another cool thing that we created at Bitsgap is that as you click on any cryptocurrency of your portfolio, let's say basic attention token, as you click on it, now you instantly get a list of all cryptocurrencies to which you can buy, or to which you can trade the basic attention token. So instead of going here and then manually typing in the basic attention and getting this list, notice that I've spent like maybe 5 seconds to do this. But here, as you just press on the cryptocurrency, you instantly get this list. So that saves time. And as we know, on the cryptocurrency market, which is extremely volatile, even 1 second makes a difference. All right. So that's why here at Bitsgap, we are constantly working on like developing better instruments so that you would spend less time on analytical due diligence and orders execution. So everything is at your disposal. And yeah, basically that's the idea that we've implemented here. And you can also change the layout. Let's say you want to have your chart completely like on the left side only, whereas on the right side you have all information like the order book, the trading panel. So that's up to you. And for now you have these two options to choose from. Well, I actually prefer this one because once again, here's the psychological idea behind this, is that on the left side you have the analytics board, and on the right side, as soon as you finished your analytical research, you will move to the right side to finally initiate a trade. So all information is basically here. And as we added futures trading, you can now connect your futures account from Binance with the API management. So in order to start trading futures through the Bitsgap terminal, you need to have API connected, and that's a completely different API. So if you are like if you've been trading through Bitsgap for quite a long time, then your original API is only suitable for the spot trading, like for this interface. You see, I have Binance. But in order to trade through Binance Futures, you need to create a new API key. So you see, I have the original one for the spot market and Binance Futures, like the completely separate one for futures trading. So all you have to do is the same as with the spot API. You just go to the Binance exchange, go to the API management, and then all you have to do is to add a new API key. And right after you add this absolutely new API key, you get the API key itself, the secret key. You have to click on edit restrictions and enable futures trading, because otherwise you won't be able to trade futures. All right. So once again, step 1, Binance exchange, open API management. Step 2, create new API key. And step 3, just enable futures trading. And now you can go trading futures through the Bitsgap platform. So as I switch to Binance Futures, notice that my interface slightly changes. So on the right side now I have these options like the isolated margin and the leverage, which I can change. So as you know, on the Binance exchange, you can have your leverage up to 125x. All right. So that's the portion that the Binance exchange covers for you. But if you are not familiar with futures trading, make sure that you fully understand the leverage mechanism and what it takes to take a larger leverage. So the larger is your leverage, basically the tighter is your liquidation price gonna be to the open price. And as we know, the cryptocurrency market is extremely volatile and it can move like crazy, let's say up by 200 or 300 USD like in just 4 seconds, or it can go down by 200 or 300 dollars. And as you have your leverage extremely large, that means that your liquidation price is very close to the open price, and most likely with this such an insanely large leverage, you will be liquidated from the market. And you don't want actually to be liquidated from the market, because with liquidation you pay the largest fee on any exchange. Well, at least it works on BitMEX like this, and on Binance as well. So make sure that your leverage is adequate. And on the Binance exchange, you have the calculator to estimate the liquidation price, the maximum possible trade size, so all the metrics. As of now, at Bitsgap, we don't have this calculator yet, all right? And from my experience so far, and it's been like, I think 3 weeks, two weeks or something from the latest update. So from my experience, the best way to use Binance Futures on Bitsgap is to monitor your futures positions, all right? Because here you have all the metrics at your disposal as you start trading. So like you see, I have the trade history. I know exactly the P-fade, realized P&L, and order history. So as soon as you open a trade, like you've set your leverage, you've decided the amount of, well, it's the Bitcoin, so the amount of Bitcoins to be purchased, it will be displayed right here. As soon as the order is executed by the market, you will find it in positions, and in positions you have information like what is the marginal cost, what is the unrealized profit, so all the key metrics that you need to know in order to monitor and execute futures orders. So yeah, you can have these opportunities to switch from the limit to the market as well. So that's just like the copy from the Binance decision-making panel, so that you would be able to not only trade through Binance, but as you are using spot market and bots, like automated algorithms on Bitsgap, it makes sense to have futures here as well. So an all-in-one platform to monitor your position. So futures market, spot market, automated trading. So everything is here, and you don't have to have your Binance exchange open. That really saves time, and that's why we've implemented Binance Futures. And just to remind, we are working on this section, and new instruments will be added with time. So be patient, and you will be notified with other future updates as soon as it comes. So now let's move on, and it is time to switch to the Autobots. So like, in my opinion, one of the greatest achievements of Bitsgap is that we have a fully optimized, transparent, and automated trading system. And actually, before I continue with this new section, let me answer the question. So I see that there is a question like, what is the difference between Binance and Binance Futures? So once again, Binance here is the spot market, all right? So you just buy the cryptocurrency using another cryptocurrency without the leverage. But with Binance Futures, you are now opted to the leverage trading. So it's like you borrow the money from the market in order to open a larger position. That, as a result, leads to another risk management. So make sure you fully understand what futures trading is all about before trading futures. All right. So now let's move on to the bot section, and I will actually switch to the demo mode. And if you are not aware of this feature, demo mode is basically a risk-free trading simulator where you have virtual money. All right, so see, that's all is the virtual money, and you can use this virtual money to trade absolutely risk-free. So why would you need this virtual money to trade risk-free? Well, maybe you are a newcomer and you are not yet familiar with all of the instruments that we have here. So using the demo mode, you can get yourself familiar with our experience here, like what are the instruments and what are the strategies that you can implement absolutely risk-free. And of course, for professional traders and for those who have experience trading through Bitsgap, demo mode is a perfect mode to experiment, to discover and develop on better trading strategies. All right, because here we have two strategies at your disposal: the Autobot algorithm and the classic bot. So let me switch to the presentation. Before I will explain what makes different Autobot from the classic bot, let's quickly refresh what is the automated algorithm behind these strategies. So it is known as the grid trading strategy, the idea of which is that you define the trading range, and the trading range is basically defined by the highest sell price, so that's going to be your upper limit price, and the bottom price, that's the lowest buy price. So that's your trading range within which you have so-called grid levels, or also known as limit orders. So within this trading range, you basically let the algorithm to execute trades on your behalf. So as the price moves lower, it triggers buy limit order, so it buys the base currency. As the price moves higher and triggers sell limit order, the system automatically sells the base currency and takes the quote currency from the market to, like the first option, to use it later to initiate a new buy limit order, and of course to take this marginal profit. So here's the example. So let's say the market moves higher and for some reason it does not display the chart. Well, actually just keep in mind that here should be the price moving here and triggering this 11,500 level. So yeah, as soon as the market reaches this sell limit order, it will automatically sell at the price of 11,500, and this profit generated from the market will be used to place a new buy limit order. And the difference in this case is the profit, 11,500, you subtract the cash which is required to initiate a new buy limit order, and the difference is exactly your marginal profit, which goes directly to your balance. And that can be an everlasting process of trading as far as the market price remains within the trading range. All right, so here's the example. You see, the biggest advantage of automated trading is that the highest possible trading frequency can be achieved, and you don't have to spend hours in front of your computer. You just let the algorithm to follow the strategy to execute trades on your behalf in order to extract profits from the market on every market swing. So you see, that's the example of lend trading to Bitcoin, and it has managed to execute 11,500 trades within the period of only 83 days. So if you calculate it on a daily basis, that's going to be 220 trades per day. That's an insane number. So that's, like, once again, one of the greatest advantages of automated trading is that it can be, like, the highest frequency trading can be achieved here. So now is the time to explain what makes Autobot different from the classic bot. Well, the difference is basically in the way they distribute your investments. So I hope that I have this example. No, actually I don't have it. So let me explain. So the idea is that both strategies, they proportionately and equally distribute your investments per each limit order. So when it comes to the HODL strategy, it ensures that with each level, and you see exactly each level here, that's buy limit orders, which is the buy side in this case, and the sell limit side, so sell orders. So with the HODL strategy, it ensures that with each level, it spends the same amount of your investment. All right, and let me show you the example of my HODL executed orders. So notice that the amount purchased or sold can be different. So in any case, if you multiply the amount by the buy price, all right, like, well, actually let's switch to open orders, it's way better. So if you multiply the amount by the price, like of each section, of each layer here presented, you will get absolutely the same investment value. All right, so this amount multiplied by the price is going to be equal to this price, sorry, the amount multiplied by this price. So that's the parity here. But when it comes to the classic bot, and yeah, actually, where is it? Here it is, open orders. Notice that it has absolutely the same amount of the base currency to be sold or purchased per each level. And that's why if you multiply this, you see absolutely the same amount per each layer. If you multiply this amount by the price, you will get different investment value per each level. But the parity here is achieved through the amount, like the equal amount purchased or sold at each level. So that's why there is no golden rule, like when it is the best time to use the HODL strategy or when it is the best time to use the classic bot strategy. Like we cannot by 100% guarantee the future outcome, like if the price moves higher or lower. So that's why you never know for sure whether the HODL will play out better or the classic bot investment distribution will play out better. So it's fully a random effect depending on the market conditions. So first of all, the volatility, yeah, and your investment distribution. So it can be at some point that the HODL would have performed better than the classic bot, or the opposite, the classic bot would have performed better than the HODL. But the idea of why we have two strategies is that the classic bot is the like the conservative one, it's the original one, and the HODL has been fully originated from the classic bot. All right, basically all the features are absolutely the same. What it just makes different is the way they distribute your investments. All right, and both strategies, they are designed to make sure that they will not go beyond your investment allocated. So as you switch to, let's say I'm going to stick to the HODL strategy, all right, and now is your time to decide which cryptocurrency you want to trade. So you can actually switch to the exchange of your interest. Let's say that's going to be Binance, and let's say here you have the list of all available cryptocurrencies. But what if you don't know which cryptocurrency to trade? Then for this case, if you scroll down, you will find the panel which is known as recommended strategies. So these are the cryptocurrencies that have statistically proven to be profitable throughout the last month. Or you can sort them by the success rate on a weekly basis. So in this case, the best performer of the last week was CTK trading to Bitcoin, and you can actually backtest it by 3 days as well. So that's going to be an absolutely new list of recommended strategies. So what we do here is that we estimate the profit that the automated algorithm would have earned during this period of time of 3 days, 1 week, and 1 month. So it turns out that Ocean is the top performer in this case. So if you would have initiated the bot like a month ago, you would have achieved a return of 32%. So use this panel as a source of trade ideas. So at least here you see what are the cryptocurrencies that are, first of all, liquid. And the liquidity here is basically proven by the return generated by the bot, because otherwise, if the volatility would be low, if the liquidity would be low, then in this case there won't be enough opportunities for the bot to generate such a great return. All right, so it has proven to be that these cryptocurrencies are backtested and return generated can be solid. So use this as a sort of panel of your trade ideas. So let's say I want to trade waves. Yeah, let's stick to waves, and notice that as I switch to waves, the system automatically assigns a trading range, and I can actually adjust it in any way I want. So let's say I want to have my sell side lower, so that's can be achieved if you drag the upper limit price lower like this. Or let's say you want to have your lower price wider, you can drag the line here, for example. So that can be your trading setup for this particular cryptocurrency. All right, so maybe you are trading from the support to the resistance, then in this case you're gonna look for resistance and support lines. So in this case the support and resistance, well, let's use this higher high previous, and let's use this pump over here. So let's use this as a source of resistance, and that can be your trading configuration. So basically the trading range within which the bot is going to execute trades on your behalf. So if the price moves lower, it's going to buy the base currency, and when the price moves higher, it's going to sell the base currency. So the idea of the bot is to buy low and to sell high, and in this case the effect is the marginal profit from the market. So as you finally determined your trading range, it is now the time to decide what is going to be the grid quantity. So the more grid levels you have, basically limit orders within the trading range. So that's exactly 180 limit orders, both sell and buy, distributed proportionately within the trading range that you assigned. And the more grid levels you plot, the more investment is required, because per each limit order there is actually a minimum trade size. So on Binance, for example, for the vast majority of cryptocurrencies, that's exactly 10 USDT. So for each limit order, the fewer you have, like let's say 50, the less investment is in this case is required, because you have lowered the amount of grid levels, like your limit orders in total. So another thing to keep in mind is that the more grid levels you have, let's say 160, the more opportunities you provide for the bot to generate profits from the market, because you see the tighter orders are being placed, allocated, the more swings on the market the bot would be able to seize. All right, whereas if you have, let's say, only 20 grid levels, notice that the gap between the orders is now larger. So that means that the volatility of the cryptocurrency must be enough to trigger your orders. So it can be the case that the price starts moving lower, it hits the buy limit, but it actually never touches the sell limit. Whereas if you have 60, notice that within this space you have now more levels, so that means more chances that limit orders will be hit by the market price. So that's something to keep in mind. And of course, the more grid levels you have, the lower is your marginal profit, because orders are too tightly placed to each other. The less you have, like the fewer grid levels you have, the larger is going to be your marginal profit. So here it is, 1.43, which stands for grid spacing. In other words, that's your like marginal profit potential. All right. So that's something that you have to experiment to find your optimal configuration. Either you are looking for bigger returns, and for that you must have fewer grid levels, or you want to make sure that the algorithm seizes almost all of the market swings. So by that you need to have more grid levels in this case, but like the opposite effect here is that your marginal profit is going to be reduced. But in any case, like in a midterm perspective, like the profit generated on a monthly basis is going to be pretty much a decent, like from, let's say, approximately, as we tested, from 6% on a monthly basis to even larger numbers. And you can actually see these numbers here if you click on show backtesting. For example, for waves and BTC that we've selected, for only 3 days the return generated. No, actually that's the mistake, because the range is actually 30 days. That's a mistake, that must be reported. That's actually 30 days, not 3 days. So for the period of 30 days, the profit generated is 16%, and on an annual basis estimated, that's 200% exactly. All right, and that's with the amount of 120 grid levels. You can actually change it, let's say 20 grid levels. And you will find a slightly different, you see. So that's now exactly now has become 16.75%. So 16.75 for 20 grid levels. And what if we have 120 once again? So that's going to be 16.67%. All right. So it's really case by case. It can be that for some cryptocurrencies that can work. For other cryptocurrencies, it will make sense to have more grid levels. For some, it makes sense to have fewer grid levels. So that depends on the volatility severity. So for example, for waves, it looks like the volatility is basically crazy enough to let the bot capture all of the market swings. All right. But if the market is trading narrowly, like let's say the chart looks like this, well, maybe you should stick to another strategy. So yeah, that's fully up to you, and depends on the cryptocurrency and volatility on the market. So now let's initiate the trade. Let's continue with 30 grid levels and margin profit 0.94 in this case. And now is the time to decide the investment. And before that, make sure that we have enough on the balance. Let's see what we have. I'm pretty much sure that I can close my BNB BTC in order to freeze out some capital. So let's see. So now I can actually initiate a trade. It can be that, let's say if I plot 130 grid levels with only 0.2, well actually 1, you will find that the system will notify you that that's not enough to initiate this trade, because basically this investment is not enough to initiate all of these 130 limit orders. So if you want to stick to the allocation of 0.01 BTC, then you need to adjust the grid quantity. So it will actually reduce the amount of grid levels. So you see, in order to launch the bot with this amount of investment, 0.01 BTC, only 68, like the maximum of 68 grid levels is possible for this investment allocation. Of course, if I change it to a larger number, then I can increase the number of grid levels. But if I have, let's say, 0.07, only 48 grid levels can be placed on the market. So that's the idea of how you designate the investment value. In any case, if you want to stick to a certain investment value, then you can adjust the grid quantity. But if you want to stick to the grid quantity, if you are determined to have, let's say, 120, make sure that you have enough on your balance to initiate this configuration. So as simple as that. Let's now start the bot, and notice that it can be that I don't have waves on my balance at the time of initiation. So the system will recommend me to buy it with a market buy order. So let's stick to it, and you will find a notification on the right side that it has successfully filled the market buy order. And now our trading strategy, like the bot, is active. And here you have all information you need: the investment, grids amount 48 created at this exact date and time, elapsed time, so that's the duration, investment change, and bot profit. So these are two key metrics, like essential foundational metrics that you have to really understand, because for some even experienced traders it's kind of confusing what makes investment change different from the bot profit, and why it can be that my investment change is lower than the bot profit, or for example my investment change is in the negative zone whereas my bot profit is in the positive area. So the simple explanation is coming right now. So the bot profit stands for the return generated just by the bot. So the idea of the automated algorithm here is to generate profits in the quote currency. All right, so as we have waves trading to Bitcoin, in this case the bot profit generated is going to be exactly in Bitcoins. All right, so as it buys low and sells high, it takes this marginal profit, and that's exactly what stands for the bot profit. But the bot profit is completely indifferent to the market volatility. But the investment change is the opposite here. It takes into account not only the bot profit generated, but the value of the base currency changed with time. So it can be that your bot profit is positive because it cannot be negative, as it just generates profit in the quote currency. It will always be positive in any case, regardless if the market moves downwards or sideways or goes or it's rising. In any case, on every of these mentioned market cases, the bot is able to buy low and sell high. You see, the market is falling, and here is a bunch of opportunities for the bot to buy low and sell later high, because you see it swings. Even though in general the trend is falling, but in the short term, a bunch of opportunities to buy low and sell high. Same on the sideways here. Same on the rising market. Lots of opportunities to buy low and sell high, and that is why the bot profit is going to be always positive. Whereas the investment change, it takes into account the value change of the base currency, and you see RAN trading to Bitcoin. So at the time where I launched this sample trade, I guess that was, actually on the last webcast, you see I've launched it at that point, just absolutely randomly, and notice that the market started to fall. And even though on this falling market the bot has managed to generate profits, 2.52% to my investment, the investment change is negative. Why? Well, because we got stuck with the base currency, which continues to fall, and that's why the investment change is minus 13%. And that's that's because of the market. It's not because of the Bitsgap or something went wrong. No, it's just because the value of your base currency in this strategy is now affected by the negative change as the the negative value change as the market is falling. All right. Another case, land trading to USDT. You see 45% investment change, whereas my bot profit is slightly bigger, that's 60%. So let me zoom out. For some reason it is not, well, yeah, it's not uploading because land is no longer trading on Binance. It is now known as AAV, I guess. Yeah, here it is, AV. So that's why I can actually close it. Bye. Maybe let's use another one. Yeah, well, icon trading to Bitcoin. You see 10 against 48. So that's because in a long term, you see, I've launched this bot back in like 4 months or something. And you see this, at first the market was rising and it was generating profits. The investment change was positive, but you see later it started to fall and it is now trading around the area where I initiated the bot. So that's why my investment change is lower than the bot profit, because I am affected by this falling market here. And in this case, the bot profit generated here offsets the negative value change of the falling market, because otherwise, without the bot, my investment change would not be 10%. It would be somewhere in the negative zone. And I will show you some cases exactly how it works, why automation significantly outperforms ordinary strategies like HODL strategies on the sideways and falling market. Just because the bot profit, the bot is constantly trading, it generates profits. So that's why on the falling market, the profit generated by the bot, it will offset the negative value change of the base currency. So that's the idea. So let's continue. So now you've noticed that you have activity status. So you have the active one, the out of range, and some others are also presented. So you can also find that there is a starting status, which basically means that at that time there is an order transfer, like the data transfer between the exchanges. And this status actually changes within just a few seconds, so most likely you will never see this status at all. Another one is active, the one that we see right now in some of my cases. And once again, these are my experimental trades. This is my demo account. That means that if it is active, then the market price is now within the trading range. So let's look. Waves BTC, the market price is now within the trading range. BTT trading to USDT, the price remains within the trading range. Next one is the pump protection, and that's an absolutely like a cool thing that we have at Bitsgap. That's the know-how, and that's the built-in security mechanism in every algorithm, which scans the market and with like a very big accuracy is able to scan pump and dump scenarios. So when the market is extremely volatile and moves like crazy, the system automatically detects this and it stops trading for a while, because it can be the case that without the pump protection, if the bot continues trading during the pump, like on this picture on the left side here, it can be that you would get stuck with all of your buy limit orders executed at the highest price, and then you see eventually the price of the cryptocurrency falls back to its normal area. But you got stuck with your buy limit orders, and that will significantly affect your investment, because you don't want to buy high. Instead, you want to buy at the lowest price possible to sell it later at the highest. And on the right side here, you have the example with a built-in feature that I call like pump protection. Well, actually, that's not the way I call it. It's actually the way it is. It's pump protection, sorry. So with this built-in feature, the bot will automatically detect the possible pump, and it will halt trading, so it will not trade during this extreme volatility, in order to secure your investment, so that you would have a gradual, a steady profit generation, like you see here on the right chart. So that's a know-how that we have at Bitsgap, and nobody else actually has it. Another one is the out of range. That's the case if the market price is now trading higher than the trading range, or it's trading lower than the trading range. And it also can be the case if the trading up instrument is off. So basically now is the time to explain what is the out of range on the example. So you see the price is trading higher, so as soon as it breached the trading range, it started to move higher, and we got stuck with this trading range over here, and that's why we are out of range. And for this reason, we have a trading up instrument, which if it is opted, if you switch it on, you let the algorithm to follow the market rise. So now comes the explanation of how the trading up instrument works, which is over here. Trailing, you see, if you forgot to switch it on at the time of strategy initiation, then later you can still optimize it. So let's say for waves, the one that we've initiated just 10 minutes ago, you click on view and you can switch a trading up instrument on. So basically this instrument works this way. You have your trading range defined by the upper limit price and lower limit prices. That's easy, that's something that we've already covered. But what if the price starts to move higher and establishes a new higher high, like here in the example? In this case, with a trailing up instrument on, the trading range will follow the market, like this. What if the market moves even higher and establishes an even higher high? In this case, it will move higher, and you see that your trading range is now over here. So it adjusts accordingly with the market rise. But what if the market starts to fall and it breaches the lower limit price? In this case, the trading range will not, once again, will not follow the market fall. So that's the area where you see crossed by the yellow line. This is the area where the bot is not gonna trade on your behalf. But if the price returns back, it reverts from this, like it bounces off this level and it is now trading here, the bot will be able to continue trading. So as soon as the price stays within the trading range boundaries, then the bot is able to trade on your behalf. And even higher high, you see, the trading range is following the market. So that's the example of a trading range which follows the market, as we have a trading up instrument on. Initially, you see my trading range was defined by these levels, so the market supposed to trade within this area as I expected, but like fortunately it has managed to breach the upper limit price and continue its rally. And that's something that we are all looking for, because we want to see not only the bot profit generated, but the value of our base currency to appreciate. And that's why with the trading up instrument, I was able to capture all of these market swings, and now my trading range is over here, right here. That's because of the trading up instrument, which enables you to follow the market rise. And that's the example, like the opposite example, if you don't have a trading up instrument on. So if you have it switched off, then in this case, it will not follow the market. And as soon as the market price breaches the upper limit price, this is where your trading halts. So you won't see the bot trading on your behalf anymore. So basically this is what I call a missed opportunity. So the profit that you would have generated otherwise is missed. So finally, 4 strategies, like, well, actually today I will present only 3, like top strategies based on the feedback from our community. So these are actually ready-made strategies which you can start using now. So if you are a newcomer, maybe you've never been like experienced enough in trading and you are looking for trading setups, then you can actually apply these strategies not only on automated trading here, but you can also trade them on the spot market, like over here. So let's begin. The strategy number 1 is the channel app. So the idea of this strategy is that you spot the market formation where you have the price reverting from the angled up resistance, and you see the price bouncing off the angled up support line. So this is known as a channel app pattern, and you see its exact explanation here. So when you spot this pattern, make sure that like as soon as it is confirmed, like here, as soon as it bounces off the support and you see that it has successfully bounced off here, this is the time where you can start trading, and the possible configuration for this particular scenario is exactly this one. So you can have your buy side over here, which is limited to the support line, and you can have your sell side, which is limited up to the resistance line. So this is where you expect next resistance over here. So that's why you provide this potential for the algorithm to generate profits on your behalf. So it will not only execute trades here, the value of your base currency will also appreciate. In order to limit the risk, because it's not always guaranteed that even though you spotted this perfect channel app pattern, that it will sustain and that it will continue rising. It can be that it will breach the support line, because that's the statistical analysis. It's not like 100% guaranteed. It's just what we have based on the historical prices. So we spot these pattern formations and we estimate how many times it's been successful and how many times it has been failed. So it can be the case that it will be failed. So in order to limit the potential loss, you plot the stop loss right below the support line. So as soon as you see if the price breaches the support line, that means that the pattern did not sustain, it is failed most likely. So at least your investment is limited to the stop loss. So that's where the bot will sell all of the base currency to avoid further negative effect. So you see that was the outcome for this pattern. The market did really start moving higher. So that was the potential for the automated algorithm. So not only for the automated algorithm, for the spot market as well. As you spot these formations, as you spot that the price successfully it respects the support line because it has successfully bounced off it, then you can enter the market. But just make sure that you have your risk management under control. At least stop loss is a must. Another one is angled up support. Basically a very simple one to understand. So as you see, quite many cryptocurrencies, and I guess that was exactly BNB trading to USDT, like the vast, not actually the vast, like top 20 cryptocurrencies in terms of trading volume, like capitalization, they tend to respect support lines in technical analysis. So if you spot that it really successfully bounces off the angled up support, then you can actually start trading as well. So you see successful bounce off. As you see it, you can actually initiate a trade. Make sure that your stop loss in this case is below the support line. So yeah, that was BNB trading to USDT, and you see how successfully it's been trading and respecting the support line. And the third strategy in today's webcast is known as triangle symmetrical top. like it's one of my favorite. It is formed by the angle down resistance and angled up support, and its triangle formation from the psychological aspect is explained like you see here, the selling and buyer pressure. So both sellers and buyers are fighting for the fair like price on the market to reach the equilibrium. So the intensity here is insane, and as soon as you see that like the bulls has managed to overcome, like to outstrip the selling pressure, and their success is represented by the breach of the resistance line, that's the signal for the possible market rise continuation. Whereas if the market actually, like the sellers will breach the support line over here, so you see, let's like mirror this image on the falling market. So if you would see that it is instead breaches the support line, that in this case that becomes a sell signal. But here you see it breaches the resistance line, and that can be a optimal point to enter the market. So a possible configuration for this one is exactly like this. Support line, make sure that your stop loss is below it, all right, and that's the potential in this case. So that was the strategy 4, but we will actually stick to another agenda. So that's the example here provided of how the automated algorithm significantly outperforms a simple HODL strategy. So if you would simply buy the base currency here, that's Bitcoin Cash, and you would hold it until this current price, you would be only up by 5%. But with automation, as the bot was constantly trading on every market swing, it has managed to generate extra profit. So this extra profit is an added value to your investment change, and that is why instead of having 5%, you would have 14%. So that's the greatest advantage of automation, of Bitsgap automation, is that you are able to significantly outperform the market, the performance on the sideways market with automation. And of course, if the market is falling, like here, the cost average effect will step in, because when the market is falling, the bot buys low, all right, and it basically distributes your investments by each level placed lower. So that's why your final entry price is gonna be reduced as well. So that's why on the falling market, the cost average effect implemented in the automated trading here, and of course because of the bot profit generated, as the market provides this bunch of opportunities to buy low and sell high even on the falling market, this cost average plus bot profit results in a lower negative change on the falling market. So if you would simply buy the base currency here, like your HODL strategy, and you would hold it down until this price, you would be, I think we can actually estimate it, you would be down by 10%. But with automation, as orders are equally distributed below, like these are your buy limit orders, as the market is falling, it buys low, buys low, buys low. So your entry price in this case is not here, but it would be somewhere over here. And that's why your investment change would be not 10%, sorry, minus 10%, but it would be somewhere around 5%, well, 5-6%. So that's why this automation solution actually works on the falling market as well. So it significantly outperforms a simple HODL strategy on the falling and on the sideways market as well. So that's what makes automation so perfect. So not only it saves time, you don't have to spend hours in front of the computer, but it actually generates profits 24/7, and it is able to significantly outstrip ordinary HODL strategy on the sideways, and on the falling market it actually neglects a portion of the negative value change. So basically the last thing that I wanted to show you is the statistical metrics that we've recently updated in bots trading. So as you click on view, originally you used to get the bot statistics but limited to the investment change, bot profit, and open orders. Now you can see the value of total open orders in the base currency, all right, with the bot profit added value. So you see, you can now see what is the actual value of your investment relative to the initial value. So initially I invested 0.029 to this REN and BTC cryptocurrency, and now you see that in total that's the value that I have, because the market was falling, and that's why it's been reduced to 0.026. So now it's pretty easy for you to see how the value of your investment changes in terms of the base currency, the quote currency in this case. And you can see the exact value of the bot profit and how many of the base currency and quote currency is currently in open orders. So it looks like all of my base currency, it got stuck on the market. And if you click on the chart, you will find that you see trading range is here, whereas the price is now here. So all of the RANs purchased at the time of the initiation of this trade, they just got stuck here, and the bot is actually waiting for the price to return back in order to execute all of these trades. Meanwhile, it stays below the trading range, and that's why my investment change is for this bot is negative. And another cool thing here is that, let's switch to another one, is that you now have the exact overview of what was the profit generated by the bot in the quote currency on a daily basis. So let's say I'm interested how many USDT my bot has managed to generate in the 17th of October. And here you get this information. So that was exactly 0.96 USDT. So you see, at some point of time in the past, you will find that the profit is lower, sometimes it is higher. So having this overview provides you with an idea of what is the average return that you can expect, all right? Well, it's not a 100% perfect metric to be estimated, because you just can't visualize it. So from the visual perspective, you can see where is the average. So during this period, from that period, the average is, well, somewhere around 1 USDT, all right? Whereas for some point in time, it can be that the average was around 1.67, all right? So we are still working on this, and most likely we will have features like the average bot profit and some other metrics. But as of now, you have this graphical overview, like statistical overview of what is the profit generated on a daily basis. So you see, at least you can use this information to make some future projections of what can be a future daily return range, all right? So for example, it can be from 0.27 up to 1.47. So expect next day the profit from around 0.27 USDT to somewhere around 1.47. So that's the way how you can use this statistical data. But before actually launching any bots, you can backtest them, as I already demonstrated, in order to see if you are willing to trade on this cryptocurrency. So if you are satisfied with the bot profit, let's say, let's choose another, like a random one from the list of here. Let's take Bake trading to, no, actually let's take BAL trading to BTC, and let's backtest it with 60 grid levels. Show backtesting. So for the period of 30 days, it has managed to generate only 0.79%. So that's not something that we are looking for, because we saw better examples. So that's why you will not stick to BAL trading to BTC most likely, and you will look for another one. And let's look for another one. Let's say Bird trading to BTC. Let's backtest it with 60 grid levels, show backtesting. So you see also the market was falling, but even though the market was falling, comparing with the previous cryptocurrency that we've just checked, the profit generated during this period of 1 month was 3.41%. If annualized, that's 40% actually. So maybe even though the market is falling, first of all, conduct your due diligence. Maybe you will find that it is about to bounce off and it will rise. So maybe it is about time to enter the trade, and this like statistical overview gives you an idea of what you can expect from this algorithm on this particular cryptocurrency. So on the falling market, it has managed to make 3.41%. All right. But imagine on the rising, it will be able to make even larger numbers, because not only the bot is able to execute trades on market swings, but the investment change will be affected by the positive rise as the market is going to rise, hopefully. So that's the way you can use this backtesting instrument to find optimal cryptocurrencies to trade. And yeah, so you can change the date range. So let's say from the 15th to 29th of October, and you get the exact value. All right. So that's the way you backtest and compare cryptocurrencies with each other. So as of now, we had two examples of two cryptocurrencies. Both were falling. The first one had something like 0.3%, if I'm not mistaken, because I don't remember what was the cryptocurrency. And another one was Bird trading to BTC. On the falling market, it has managed to make 3.21%. All right. So if you are willing to hold this cryptocurrency in the long term, but still somewhat expect that it will fall, but you don't want to wait for the price to fall and to that point where you will buy it, you are an investor maybe, and you are willing to hold this crypto for long term, so you are completely indifferent to these short-term falls. So that is why this backtesting gives you an idea of what can be the return even if your long-term investment falls on the short term with automation. So with automation, during this short-term fall, the bot would have managed that exact number. So that's something you can use, and that's the like third of the like all of the instruments that we have, which is my favorite one to be used, because you can actually experiment and come up with many different strategies to trade. All right, so if you are a mid-term trader, then there are some other ways to use backtesting. If you are a long-term trader, then the way I use it, I already explained it to you. And if you are a short-term trader, then you can look for lower ranges in this case to find optimal cryptocurrencies. So yeah, basically that's it for today. I hope that everything is crystal clear to you, and even if something is still unclear, use the demo mode to experiment with all of these instruments to find what is the outcome and to find those optimal strategies. And you can actually go to the Bitsgap page, main page, where you have the knowledge base, which contains all information you need, as well as some YouTube videos that I've made in order to explain some strategies that you can use, optimal configurations to start trading. And you can go to blog where we are posting valuable information like useful, for example, strategies, configurations, other instruments that you can use in order to improve your trading skills, like your technical and fundamental analysis skills. So we are here for you, working on better experience so that you would be able to generate better returns, basically to boost your results. So that's in our interest, and that's why we are having these webcasts on a weekly basis. So thanks a lot for your attention. Let's see if we have some very interesting questions, because notice that Erwin is quickly enough providing you with the answers, and I guess there is no questions left for me. So thanks, Erwin, and appreciate a lot as always. So yeah, if you maybe in the process you will have some questions, then feel free, in the process of trading, feel free to ask your questions in the support chat here, or you can connect with us in the Telegram. So you have the community there as well, where you can ask your questions. We will provide you with the meaningful answers. Maybe somebody from the support team, maybe somebody like from the investors or traders that are actively using Bitsgap platform, and they have experience to share with you. So yeah, feel free to communicate. Communication is basically the only best way for you to learn faster. And yeah, exchange your ideas, exchange your thoughts, and provide me please with your feedback, so that I would be able to improve the quality of our webcasts next time. So yeah, because I'm the human being and I also need your feedback. I need this exchange of ideas with you as well to keep up, to make sure that you get like the most out of our webcasts, all right? Because I basically take your time, and I want that you pay your time, and for that time I provide you with meaningful information. So thanks a lot once again. See you next time, and I wish you profitable trading.